Tapping in as we get ready to go another round from around the world and across the web. Our weekly sit-down, our one-on-one with the advisor, Monty Greenspan, Quantum Economics. You've got questions, he's got the answers. Not financial advice, but maybe some pretty darn good life suggestions. Just saying. You can always subscribe to the newsletter. It's free right there, a click away, quantumeconomics.io. You want to invest in Bitcoin mining? We can do that too. Quantum Expeditions. Big week as we check in with you once again, advisor. First question for you. Privacy and security concerns when it comes to protecting one's own privacy with digital assets. Well, what would you recommend? What would you say?
Yeah, that's an excellent question and certainly very important. Blockchain is inherently more secure and private. Data privacy is part and parcel of what blockchain is, especially for those who know how to use it. More important, and what I think many people are excited about, is the idea of monetizing your own data. Companies like Facebook and Google have been monetizing our data for years without ever actually paying us. They pay us in convenience, and then they literally make millions off of our data. So what blockchain is going to enable is people taking charge of their own data, setting up decentralized data marketplaces where people can actually monetize themselves, monetize their data, and become their own agent, so to speak. Just in December, DOGE announced a DPIN device that they've released that you can take it with you wherever you go, and it basically shares your data onto the blockchain, and you can monetize it directly. It's so much better than all that data being monetized out the back of your phone without you ever knowing about it.
This one comes in from a user on X, Monty. Recently, Wendy O talking about there will only be 5 crypto exchanges in the U.S. We mentioned some that we thought would stick around. And this question comes in from I Am Wonderful, old school. Do you think crypto.com may be the safest in the U.S. at this point? I use Coinbase, but who knows what their future holds. I need to get better versed in using DeFi exchanges. Do you have any video suggestions that explain using DeFi from start to finish? Thanks.
Excellent question, and I wish I had a better answer for you, but unfortunately I don't. It is part of what we're trying to build with Cora Finance, which is an AI assistant designed to lead you through the murky waters of decentralized finance. The catch-22 of crypto is that centralized exchanges provide a very user-friendly and somewhat safe environment for beginning traders, but they are susceptible to rugs, hacks, and even bankruptcies, as we've seen in countless cases like Mt. Gox, Quadriga CX, FTX, Celsius, etc., etc. The list goes on. So as soon as you learn how to self-custody, that's when you truly get the benefit of cryptocurrency, where you have a wallet that you truly own and nobody can access unless they figure out your seed phrase. But unfortunately, at the moment, there exist no shortcuts to this other than just doing the research and understanding. And be very, very careful. Everything that you see could and might be a scam. So research well before you start making transactions. And definitely do not share your seed phrase with anybody.
Toki, all right, what's up, buddy? He wants to know, is it worth looking at Bitcoin futures right before the halving?
Thanks, Toki. Always love your questions. The point of a futures market and where a futures came from is to lock in a specific price in order to make a more calculated industry decision. When you're, for example, a farmer who wants to grow corn, doesn't necessarily want to deal with the volatility of the corn markets in the meantime. He needs to make an investment now in order to buy the seeds and plant them and grow them, and he's only going to see the corn in a few months from now. So then he would go to the market and sell that corn in the futures market, where a trader would pick up the volatility risk, and the farmer could then make a much more straight calculation about how profitable he's going to be once his crops get cashed in. Interestingly enough, this could be used for Bitcoin mining, such as we're doing with Quantum Expeditions, for example. If we did not want the volatility risk of Bitcoin, we could technically sell Bitcoin futures in order to lock in the price. Of course, in this bull market, we're very happy to take on the Bitcoin volatility risk, and it's been working out very well for us so far. What's even more interesting now is that Coinbase plans to launch, possibly as soon as April 1st, futures trading on Dogecoin, Litecoin, and Bitcoin Cash. The first two of which I consider myself a proud member of those communities. I've seen a lot of Dogecoin miners and Litecoin miners recently ramping up their activities. So I think that, it could certainly be a useful market to open up. And this article from Crypto Potato goes into the legality of such and if the SEC is going to come after Coinbase. But, what else is new?
The weekly sit down as we ask the advisor your questions from around the world and across the web. Thank you for engaging. Thank you for the community. And we really do want to try to provide you with the best possible facts versus FUD. So cool to see this thing taking off and you, Madi, taking the time to sit down and just share with us what this community is all about. Okay. Here's one from the OG crypto curator, Paul McNeil. He wants to know, why do people use obscure exchanges? The cryptocurrency platform Blast was hacked and there are massive losses, speculation surrounding who might be the suspect. But why do people use somewhat obscure or, quote, sketchy exchanges?
Yeah, Paul, you're absolutely right about that. It is pretty baffling why anybody would trust an obscure exchange. But don't forget, even the largest exchanges today did start out somewhere. At some point, there needs to be somebody who trusts it to begin with. And I think influencer marketing helps a lot with that. I actually saw a lot of people talking about the Blast network recently on my feed, even in my DMs, people were talking about it. This one really affects me personally because I actually started doing the research and I even transferred some Ethereum into a secure wallet in order to try it out. However, at the very last minute, I decided against it because it just didn't seem secure enough. I did understand what I was doing to begin with. I also, the idea was to use an amount of money that I could afford to lose, so I didn't really mind. But I think that's the crux of it, is that people with small money are willing to take risks, and that's what happens here.
I gotta get to this. I gotta get this last one in for you, Madi. Elon Musk parody account, so you know it's gonna be good. Bitcoin price predictions after the halving in 2024. Mr. Greenspan, what say you?
All right, awesome. Let's end with a fun question, and thanks everybody for all of the amazing questions today. It truly is an honor to see this taken off. Let's look at the charts, man. Okay, so here's one thing that I noticed recently, and obviously past performance does not indicate future results. Just take it with a pinch of salt. I don't predict the future. Even if you see me saying, 280K by end of year, which is currently pinned to my Twitter profile, I'm not predicting, I'm projecting. I would like it to go to 280K. I'm not saying that it will. Nobody can tell the future. That would be foolish. But here's a Fibonacci retracement that I drew on the chart yesterday night while I was bored. Anyways, if you take a look here, Fibonacci retracement works from the bottom of a movement until the top of a movement, and then these are the levels that are likely to provide some support. But zoom in here and notice there is quite a gap between where the first Fibonacci level is. Like a Fibonacci retracement, usually it'll break the first line, come to the second line, even in a strong uptrend, that's quite normal. But take a look, it hasn't even touched the line. So if we take the bottom of this, the low of this candlestick is 60,805, and the Fibonacci level itself is around, let's say 60,113. So a good $600 or $700 shy of hitting that support level. And it does look like we are slated to break another all-time high, at least several before the halving, which is in approximately 23 days from now on April 20th, on or around April 20th, depending on how fast the blocks move. But I think the date is pretty much locked in by now. But here is my 280K by the end of the year. So if you can just imagine the line currently moving to that dot, it doesn't seem impossible. It actually seems quite doable to me. But we'll see what happens.
He's the guy with the Series 7 that you should be following. Subscribe to the newsletter. It's free. A click away right there. quantumeconomics.io. Remember, be smart, be safe, stack sats, and hodl self. Custody your Bitcoin. Not financial advice, but a darn good life suggestion.